All right, welcome. It is February 19th, 2021. My name is Andrew Faldy, and we're going to talk about trading, as you suspected, right? So, very fast recap of last week. We met last week, and I wasn't planning on doing 2 weeks in a row. There's a small chance we'll just keep doing this every Friday. But I wanted to do a recap because I feel like there's such an important element to seeing what happened after we talked about it, the follow through, the out of sampleness of that. And there's some very good stuff to show you, and I'm very excited to show that to you. And I think stringing together the ideas and the systems and the strategies and seeing how they connect week to week to week can help you. And there's very important and valuable stuff in here because this is not a sales webinar. This is not a come join our community webinar. We'll talk about that. That's always available. You're welcome. I'd love to have you. Okay. This is for you to take away, make money, improve your trading, whatever, lose less, make an improvement, a measurable improvement using a very simple set of ideas, principles that I will share with you. And when you've made some money, you can choose if you want to reinvest it and continue a little deeper with us. All right. So, very simple goal. We want to turn rough markets into smooth growth. All right. Rough markets that are extremely inconsistent into results that are smooth. And I can tell you that this isn't theory, this is practice. This is an actual market on the left. This is an actual equity curve on the right. Okay. So we're really doing this. It really happens. We're having a great time. And I want to help you do that too. All right. We will rapidly recap some of the bullet points and slides from last week. And then I'm going to get right into the trades because I want to look at more of them than we did last week. So inconsistent market, consistent results. So we're talking about what's working now, what I'm going to do next, how you can follow it. And then you're going to get lots and lots of ideas. And this is a live webinar, not one of those pseudo live webinars. It's actually live, so you can ask questions. They are encouraged. Ask them as you come up with them. If you want to see symbols that I'm not showing you, ask me. I'll pull it up. You can see what it looks like. All right. Or you can send me an email if you're watching the recording. So annual right now, this number actually is higher. Currently annualizing more than 50% with fully automated. I grew a $90,000 account to 220. Last week I showed you that it was at 230. This week I'll show you it's at 254.9. It was 255 a second ago. All right, so this stuff is working. All right, and that's a discretionary account where I do, yes, have a lot of Bitcoin, but I'm trading a signal on it. And other signals are working. It is working. Other signals are working, or the same signal even is working on other stocks too. But this is real stuff. This is not about making 6 or 8%. This is not about buy and hold. This is not about having fun trading. It's about making money. All right. So that's an old picture. Yes, we're getting results from people. Tim made money. Preston's made money. I put an interview after we talked about that. I emailed him and said, hey, let's have a conversation, let people know kind of what your story is. So if you haven't seen that, it's on the automated trading accelerator page. Scroll to the bottom and you can see that. It's called learnautomatedtrading.com. Scroll all the way to the bottom. You can see an interview with both Tim and Preston. And more are actually scheduled. So I look forward to sharing more stories with you of real people getting results. All right. So we're going to get results today. We're going to show you results today. I'm just looking to see if there's anything actual. I don't want to waste time on slides when we can look at charts, right? So I'm just checking, and that's that. So we're not going to do any more PowerPoint stuff. We're going to do chart stuff. All right. Last week, I showed you the same general setup here. I'm on my laptop. I have a production machine. Somebody asked me today, he said, I see you have like 6 screens. Do you have to have? No, you absolutely do not have to have 6 screens to be automated trader. You can have 1 screen. All right. You can't do it from your phone yet. All right. You do need a laptop or PC. All right? It doesn't have to be a PC. You need a computer. Can't do it from a phone, but you don't need 6 screens. So we're looking at is a production, analysis and studies platform. And this is what I did. What's funny is I actually, because the title is What Worked This Week. I started to go through this and I said, well, because we didn't have time last week, let me just pick out the best ones to show. And I caught myself. I'm like, why am I doing that? Let's just show everything. Let's show things that lost money, things that made money, and see how it's navigated the market, see how diversification helps you control risk, be flat when things are crashing, barely lose money when they are sideways or dropping, and make extra money when they go up. And that's the process. So I actually copied and pasted the list like I was going to only keep the good stuff, but I'm actually going to get rid of that. We're actually just going to look at the exact same list as last week. All right. As a reminder for some, and for you to, if you are not familiar, what we're looking at exactly. All right. So this is in January of this year, which is not long ago, obviously, but a month and a half ago, a little over a month ago. In our community, I pulled up a list and I said, these are the stocks I'm most interested in. So actually just keeping that list. So for them, this is an out of sample and continuing ongoing look at that. Now, for you, you've seen it last week. You've seen the list. So we're going to continue to look at how did those stocks trade since last Friday? How have they traded over the last year? We could do more time than just a year. The real problem with more than a year is it will take too long. I'm more than happy to show you more than a year. But each chart will load very slowly. It will take too long. I want to give you the context of 1 week, 1 year. So let's look at what we can see on the chart. And actually, you can see more than that. The default view here with an hour is about 2 months. All right, so you're actually going to see 2 months plus the fact that we're looking at what's happened since we first talked about this. So that's a week. So 1 week, 2 months, and a year, because the year will come up on the equity curve. So that's the data you're going to get very rapidly, very quickly. Okay. As far as what you're looking at on the chart, there are buy and sell signals. When I zoom in, you can see it better. That's a buy and that's a sell. And if it's the blue-green color, that's a profit. If it's red, which is hard to see, but if it's right there, if you buy here and sell here, we all know buy high and sell low, you are going to lose money. I don't mean the conceptual buy high. I mean, you buy a higher price and you sell at a lower price than you bought, you lost money. So the line is red. So when we look through this and we say, what happened last week? We were gone on the 12th, literally a week ago. There was a sale after a small loss. And even though the market's been strong, even though lots of things have made money, CRDF, and I'm skipped all the way down to where I stopped looking before the meeting. I'm just showing you how the chart looks, what's going on. Since then, it's been flat. There's been no position. So the stock has lost money, but a trader has not. Very, very important part. I've had this question in the past. If you're trading 40 symbols, 50 symbols, 100 symbols, 300, 5,000 symbols, doesn't matter. At some point, aren't you just emulating the index, the broad-based index, and you should just buy the SPY? Well, that's completely and absolutely wrong, because I can be flat, things not going up, and I can be long, things going up. Very, very different result. When I don't have losses from this and I have gains from something else, that's not what the index did this week. The index did the average of those. I am participating in profits and reducing losses. Extremely different, extremely different. I remember I felt that way years ago. I thought I just like to trade the SPX or the RUT or ES or SPY. I just like to trade the index because it's everything in one and you can just trade that one thing. What an utter mistake, honestly, a mistake of missing out on great opportunity years ago that I'm now participating in. And that is individual names within the index create individual opportunity. And combining literally 1,000 symbols. If there's an ETF that has 1,000, you take S&P 500, and those are not a lot of high beta names, so I'm not going to say that's the one you would use. But if you trade all 500 separately, you will get a separate result than investing in the index. If you own all 500, you'll get the same result. minus a lot more commissions and slippage. But if you traded them, you would get a different result. I don't know that it would be better because they're not high beta names, but it would be different. Okay. So now that we know how the charts look, I don't want to recap too much for those who already know this stuff. We will zoom in now. Oops, that was weird. On audio I. All right. So we're going to start at the top. Oh, that's it. It kind of like got stuck on a click and drag. Yeah. All this, that was the list. I think we just kind of zoomed in on. This is the full list though. But like I said, you want to see a symbol, you want to check me to make sure I'm not cherry picking, bring it on. All right, I'll pull up anything you want. As long as it's high beta and not a penny stock. If it's a low beta and or a penny stock, it's not what we're doing here. We want to swing trade, fast moving, mid-priced stocks. High priced is fine too. All right, Audio I. Okay, has been whipsawed lately. There are 2 small losses. As you see, the buy and sell points are extremely close to each other. That's fine. All right. So let's look at how does that in the context. I think I said this last week in this meeting. If it wasn't in this meeting, it was in one of our member meetings. I said, as you get closer to where you actually can see what's going on like this, I'll even get rid of that big winning trade. If your real world experience is, yep, I saw Audio I in the meeting last week, so I started trading it. Guess what? You lost money. You did. All right. Net, you would make money on what we've talked. Actually, that's not true. Let's go back. What was the date? I'm wrong. You either, what was it, 12th? Yeah, you lost money. That's all there is to it. Because the trade ended, and then there was literally 3 whipsaws since then. Okay. But as you zoom in on something and say, well, let's see if this works. Oh, it looks like it doesn't. Really? Are you sure about that? Let's go look at the bigger context. Here's the last year of the equity curve. Now, this is where I want to bring up what I either said last week in this meeting or in our member meeting. If you've been in a hotel or you have one, spouse has one, whatever, one of those super high powered mirrors that like really curved shape. And when you get close to it, you can see inside of the pores on your own face. Okay. That's what you get as you look closer and closer and closer on a stock and an equity curve. All right. So this is a 1-year snapshot of P&L. And if you saw a 20-year, if you copied and pasted this and connected each of them over 20 years, it would get smaller and smaller. The roughness and the bumpiness of it would get smaller and smaller. It would look like a straight line. All right. So as we zoom in on a year, I look at this and say, this is tremendous. This is fantastic. A 1-year equity curve, 21,000 return. By the way, that's 210%. All right, 210% return on capital. And the drawdowns are, I'm eyeballing the worst one, 5. Okay, that's over 4 to 1 return on drawdown. If this was a 10-year equity curve, you would cut that into a 10th. It would be 0.4 return on drawdown, because these drawdowns would represent many, many months and massive givebacks. But it's not. It's days and weeks as it moves on. All right, so that's Audio I. This is what it's done recently. This is where it's coming from less than recently, over the last month or 2. This is where it's coming over the last year. All right, I think this is what we're looking at. This is what I promised if you came today was what has been working and what to look at next. I believe, and there's some evidence, we have evidence of it. It's not a tremendous amount of evidence, but there's enough to justify me saying this right now. When something generally works over time, but it hasn't worked recently, but it's holding its own, that's a lot of conditions. So let me say it again. When something generally works over time, that's what we see here. It has not worked recently, but the amount at which it has not worked recently is under control, very similar to past patterns. Then it might be a great time to participate. Okay. Buying the dip on a non-buying the dip strategy. All right, there I am again, making things kind of convoluted. Let's be absolutely clear. We're buying the dip on the equity curve The strategy itself has lost a little, fine. But the strategy itself is momentum. It has outlier large returns. So this is an asymmetric reward system and a mean reversion concept about when to get in. So when I see something that actually isn't working very recently, but it's very much under control, I look at that as an opportunity for a newer trader, somebody who's not in it yet, to go ahead and pull the trigger. All right. It's a little harder when this is the big spike or this is the big spike. But when you're going through this, yeah, go ahead and start it and be in that. All right. We are going to go faster, I promise. Apps. Let's look over the more recent term. So apps did some wonderful stuff for us. It got out of a nice big winning trade. A small whipsaw, avoided this drawdown, has re-entered here near this exit point here without being in this drawdown, and is prepared for upside. All right. So apps is nice. It has had one little loss. It is a very, very, very pretty 1-year equity curve. I don't normally see 10-year equity curves that smooth. This is a 1-year equity curve with that much smoothness. That looks very good. All right. And how this works is spikes followed by pullbacks or grinding. So spike, spike, pullback, grind up. Okay. Sideways, sideways, sideways. There's a lot of flat periods there where you're not even in the trade, and then a massive run. Okay. Followed by, and look, what's the length of this? Beginning of August to, and basically 3.5 weeks is this. And then how long does it take before the next significant thing happens? 2 more months. So don't go and say, look at that big trade. I'm going to dig the next 3 trades. And if it doesn't work, I'll stop. Then don't even start. Don't even start if you want to do that. A little more context for those who don't know. This is the RSI on the hourly standard settings. When the RSI of the 14 period crosses above the 50, so it's not really standard settings. The one change we make is when it's above 50 is a buy. When it's below 50, it's a sell. If it closes the 1 hour bar above, you buy the next bar. If it closes 1 hour below, you sell the next bar. Good news about that is you don't have to be precise on timing. We have done studies to show if you wait 2 hours, you get significantly similar results. I've even done where if you trade the open of the next day on an hourly signal, you have significantly similar results. Isn't that amazing? Isn't that amazing? Simple stuff, very tradable, very usable. The important part is you've got to trade the right names. They've got to be things that follow through. If you don't get these massive moves here, if these massive moves here are only small, then the whole thing doesn't really make a lot of sense. All right. It looks more like this. Let me show you this. Here is my goal is just to run through the list, but I keep wanting to stop and learn with you. This isn't even terrible, but that's SPY over 1 year, which is, it's done very well on that. So let's break it. Okay. If you trade low beta, which SPY would technically be a beta of 1. Oh man, it's still not that bad. Okay, that's good news. So SPY even works. Here's the real problem. 10-year return goes through pretty rough period. This is a super low volatility period where no momentum strategies worked, especially on ETF. But on ETFs, they did not work. Okay, on low beta stuff, it really did not work. This is super low volatility, not a lot of opportunity throughout there. This is a 10-year equity curve. It makes 80% over 10 years. You all can do the math with me, right? 8% a year. It's not even worth looking at. It's not worth looking at because you barely, this is a big spike, right? The recovery after COVID. Without that, we'd be down here at 5% a year. It took that just to get this working. Well, if you trade fast moving things that tend to have big moves, you can get one of those every couple months or at least once a year. And if you can just bide your time the rest and you catch those big 20, 30, 60, 80, 100+% moves on some fast moving, massive opportunity there. Okay. Back to ARKT. All right. Beautiful, beautiful. Love this. All right. Caught the trade long here, sell here. We met here last week and you're out of it. You're not in this. Being out of losses is, to me, is second only to being in big wins, being out of massive down moves. All right. So ARC T, this is one of those where it's changed. It's something that's developing. Back here, it was not a really good opportunity, and then it's changed lately. I like equity curves like this. If I'm going to put 1%, 2% of my account into something, I don't mind that, because this has had a significant change. We talked about that in our training, but this is where it was not doing anything, because it's something that doesn't do anything. And then it starts to do something, and now it's creating opportunities. And look at these massive ups and downs. We're still generating profits because we're swing trading, right? So through all this period, we're making profits while this is almost looking sideways, because you go flat during the drops and then you go long, okay? ATLC. Okay, great equity curve. That's a 2-year. I loaded 10 years, so it's actually not taking too long. If something takes too long, I'll switch it back to a year. So this is one sitting on profits now. Okay, the trade was last week, so 1 week ago at the close. So you could have taken that trade, and that would be from $28 to $31. Okay, so that's something that's actually happened very well. Anything that lost money prior to this, looking at ATLC, if there are any losses net out of these, were absolutely made up for with this. All right, do you see the asymmetric reward opportunity there? Do you also see, I had this conversation, I think he's here live, Elad. He is here. He's here. We talked a little bit ago. He's a trader, been an avid options trader for many years, and then learning more about automation along the way. And he's had a similar realization as me, that the quote unquote income and quote unquote high probability of income strategies, for some reason, continues to suck money out of people's accounts more often than it makes money, or at least as often. Very inconsistent results. So why is it called quote unquote income and quote unquote high probability if you don't make money often? Income, what's an income? A paycheck is income, right? Dividends are income. They just continue to happen over and over again. Well, income strategies that don't provide an income should just not be called income strategies. They're called asymmetric risk trades with medium probability that are not super attractive and should not be traded at a big size. Okay. Why do I say all that? I don't want to just be negative on something. I'm trying to, I know a lot of you are in the options markets. If that resonates with you, you're not alone. There's another way. These trades that I've just shown you so far, AudioEye, apps, ARCT, ATLC, okay? How many trades have there been? There's been one in ATLC, one, okay? So we're gonna call that a win. ARCT has been flat, so we're at 1 win. And there's been 2 losses here. Oh, now we're at low probability, right? 1 win, 2 losses. Now we're gonna have some real fun. And there's been 1, 2, 3. Did you just see what happened? 5 losing trades, 1 winning trade, profits. Low probability, consistently profitable. If that's all you want to take and log off right now, please write that down. Let that sink into your head. Low probability, consistent profits. I just want to say it again. It makes my heart warm. Low probability can provide you consistent profits. Just showed you in the first 4 symbols. Several tiny, tiny little whipsaws, and ride the winner. All right. I don't care about win rate. Just don't care. I'm in the 30s. I just showed you like 15% win rate in 4 symbols. That's profitable. I'm in the 30s and quite happy with it. BE, Bloom Energy. Okay. It looked like it was turning here. Buy, sell, I'm out. Hey, that's another loss. 6 to 1 so far. You like that? 6 to 1, 6 losers, 1 winner. Profitable, avoiding this. I will do that all day long, especially with automation. Bivy, was out of all of this, did not participate in the spike, but is long now. Okay, it can get out quickly if you add the RSI to that. Edit stretch. Oh no, that's not what I want. I want this, this, this. I should have the indicator this is based on, right? I'm just used to automation so that I don't need. So let me just switch this to the levels we use. By the way, some nice names I haven't seen super often. John, Nestor, Derek, several others. Just want to say hi to you guys real quick. Blink. Okay, similar deal. One quick loser out of the big down move. I think, what are we at, 7-1 now? Now I don't have the actual, and I haven't been showing the equity curves. I'm trying to go faster with what's working this week. Here's another one. Now we might be into break-even territory at this point. Oh no, now we're ahead again. Here's one, 41 to 43. So that's generating profits. CalX, we're going a lot fast. Last week it took us till the end. I think we were an hour in before we got to the C's. So this looks like, yeah, that's doing well. So here had a nice win, one small loss, and back in long. All right, let's just pull up a little more context. All right, so this is when it was a low-priced, low-beta stock. That story has changed. This is now on my tradable list. Okay, let's make sure we understand that. There was a time I would look at an equity curve like this and say, oh, I can't trust it because it used to lose money. How short-sighted, I didn't understand, okay? Let me do this, I'll just go weekly. Okay, this is not like this. One of these periods of time is not like the other. IPO, crash, common story, right? Choppy, 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 breakout, okay? That's a weekly. We only see one trade on the weekly. So by the way, let's just pull up the equity curve. I have no clue. Hey, look at that. There, that even shows you the change there. But on a weekly, hundreds of signals in here, from here to here, hundreds of signals on the hourly. So we identified this a month ago, and as we continue to move, maybe week to week, maybe month to month, we'll see how this works out. But we've already seen that if it's going to go down, we're not going to be in it. If it's going to go down, we're not going to be in it. All right. Obviously, there can be a big move, very fast move, overnight move. That's why we have our sizing correct. These are high beta, high quote unquote risk. You can make a lot on a little bit of capital. You can take a portion of your capital and make more than you could make just buy and hold the whole market, putting it all at risk. All right. BWMX, this is one I've enjoyed. This is one I definitely have on live and have seen the profits swelling nicely. So from 40 and change up to 44. That's over 10% in a week, by the way. Oh, we already looked at that one. Sorry, somehow I got clicked backwards. That one too. Here's a nice one, CLSK. This was recently, this is only 2 days ago, buy and participating in the upside. What's the SPY been doing? I don't even look at that much too often. Here's what the SPY's been doing. Okay. This, when you see these big moves happen, it's not because the market's been going up a lot. The market has gone sideways over the last week. All right. So these are not systematic or systemic stocks. These are not system-based. These are not macro stocks. These are not stocks that participate based on what the ES is doing and just do it more. These are stocks that play their own game. They dance to their own tune, and you can follow it with a simple signal. All right. How does it keep happening? Here's a great one, CLSK. Did we just talk about that? Do I keep clicking on the wrong ones? No, this is a different one, right? No, it's the same one. Okay. Same one. Very nice. Very nice. That's from 29 to 34. 15% or so. All right. CRDF. you're out from here to here. It goes down, you're not in. Well, this one's pretty. This is a nice, oh, I see. It's not loaded the data yet. Okay, yeah, so it's had several wins lately. Moderate size loss there, and currently holding long. We just saw the SPY. The SPY is selling down to about a multi-day low, and this is at a multi-day high. Maybe even longer term than that. I don't know. All right. Mostly flat this, with one little loss in the middle. DraftKings, this was in the news a lot, right? All right, so it's had some nice wins lately and doing very well. We first discovered it here, and it's been profitable since. All right, so we added it to our list as something that had done well in the past, worth following in the future. Now it's profitable. All right, we're only a month in to this list selection and strategy selection. Oops, man, what was that symbol? Domo. Okay, I typed it in the wrong spot. All right, so it had a nice win there, has flat during the return back down, has re-entered. Let's, do you want to look at the longer equity curve? Okay, very nice. Very nice. By the way, that's 1 year, 200% return on capital. 1 year, 200% return on capital, trading with slippage included. Very nice. Let's say, well, I didn't know this happened. Great. Let's say you started here. 100% return on capital from that strategy on that stock. SPY makes you 5 to 8% a year. Yeah, I'll go with these. Do 1/10 the size and get the same amount of capital. Etsy is fantastic. It's been fantastic for a while. Currently in a long, slightly below the entry price, and it's quite near its all-time high. Remember, this is a simple RSI crossover. It's more about the stock selection, though. That's our important part of this. Stock selection, diversification. All right. Any requests on symbols, I will gladly pull them up. We've already made it twice as far as we made last week because I'm trying to show the, let's see, add some more time. Oh, beautiful, 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 beautiful. Okay. So the question comes up, or it could come in your mind without being expressed. Yeah, these are things that went up a lot in the past. What if they don't go up? If they don't go up, I'm not going to be in them. I might get little whipsaws. That's fine. Here's a whipsaw. But I'm not letting this drag my account down. Just because Forte Biosciences Inc. had some big moves lately doesn't mean I'm just going to buy and sit on it. All right. Talking to a good trader yesterday who has been consistently profitable since working with me on multiple strategies. And one of the things I'm doing now is Bitcoin. He's just struggling to get into it, struggling to trade it. And because it might not go up anymore. So if it's not going to go up anymore, I'll sell it. That's that. I won't even sell it. My computer will sell it. FLGT. Looks like another one where we would be flat and not get in. 1 year. Wow, look at that move. That was nice. Okay. Awesome. Awesome. Look at this. We identified this here based on this. And this is what it's done since. Okay. It last month was up 180% over its year, was added to the list, and then the performance has done this since. Okay. I do, that's another one of the, you see how simple it is, right? An RSI, are you kidding me? On an hourly chart, are you kidding me? It's going up, buy, it's going down, sell, are you kidding me? Okay. But I know too many traders, and was one of them, who would see this and say, I can't trust it. Just because it did that doesn't mean it's going to keep going. I got over that. Okay. Look at this, right? You see this flat line? That's a very important flat line there. This is an equity curve, hour by hour plotted. This is an extended period of being flat. You're not in it. This is an extended period of being flat. This right here is a period of being flat. Okay. What's happened lately? It's dropping back down. You're flat. Okay. So if it's going to go from 134 to 34, will be mostly flat. It's not hard. At some point, it'll come off the list because it won't have been working lately. Pull it off. It will lose very little until we pull it off, and we're done. Wow, here's a perfect example. What if it doesn't keep going from 115 higher? What if it goes from 115 to 80? I'll be out. See? Bought there, started going, decided not to, went from 110 to 80 with no position on. Flat. Returns climb, stock drops, equity does not. Most likely a dropping period. Flat for a couple weeks, 2 weeks it looks like. You were out. You were out. Here's our around our starting date. This is the out of sample, created a new high, settled in around where it's been. So you were certainly moving in the right direction with that one. Futu. Okay. Stock continues to move in the right direction. Equity curve continues to move in the right direction. Identified this here. Let's even use the trade by trade. Oh, that's 12, sorry. Looks like right around here, we identified it. This is the P&L since. Oh, lots of questions, sorry, didn't see those. Can you look at AT&T? Is that just T, right? I'm guessing that's not a good one, unless it's been doing well lately, because not a high beta name. Robert, it says R. Frank. I think it's Robert. I have not had much luck coming up with profitable Forex trades. So here's AT&T. I don't want to get too far ahead. So it's a low beta stock. So this would not pass our criteria to trade because here's a weekly chart, 20 years. This is a stock has made no growth since 2001. So we would not participate. It gets above 50, we can start participating. So that's the issue there. Even that big move there. What is that? 06. Over 1 year, it did have a period where it made like 80%. Our filter is actually like 100% in 1 year. So even this one nice trade would not have worked. Now here's a beautiful thing. Let's go back to the hourly. 60 min. I'll pull that up, David, in just a second. 1 year. Okay. even if you had this belief in your heart that AT&T, because it's the cellular world, it's the 5G world, and this is what iPhones were based on, basic, whatever, you know, they're exclusive iPhone, and you just believed AT&T was going to come back and be the greatest stock ever, ever, ever. If you do what I say and use it as a part of your portfolio, it would have no impact on you. Why? Because over 1 year, it's lost 0.4%. I've shown you things that made 100%. Is that right? I'm sorry, 4%. Don't know my own math. It's lost 4% on its size. And if you're using 2, give it 5. I don't care. If it loses 4% of 5% of your account, it has not impacted you. I should just be able to do that math, but I want to get it right. If you have $100,000, you have $5,000 into the trade, and it lost 4% of its size. It lost you $200 on your $100,000 account, while some other names made $2,000 on a $2,000 allocation, or $1,000 on $1,000, or $5,000 on $1,000, or $10,000 on $5,000 allocation. All right. So even if you pick the wrong stocks, which I have done, I have picked things because my day trader friends who make a lot of money in them say this one's on the move, the storyline, they're telling me all these things why it's so exciting, so I put it on. All right, they break all my rules and I put it on. It's too low a price, too low of float, or not float, but market cap, and it hasn't made any significant move over the long term. It's just like one spike on the short term, and I trade it, and guess what? I lose money, but I lose so little that I still make money in the account. The account still grows because that's me breaking the rules on stock selection. If you choose to select this, even though it's not really the way I would want to select a momentum stock, then you still aren't going to be hurt. Isn't that beautiful? Let's pull up KSS. Kohl's. I like the store. They do Amazon returns, right? That's probably their best edge right now. That looks nice. That is. It's moving. It's profitable. I like the detailed. I like to see calendar-based returns. 90% in a year, trading RSI hourly with slippage is in there, penny slippage. No commissions because you don't pay commissions. If you're paying commissions, fix it. Yeah, 1 year. Let me just triple check. 10,000. Yes, we have a $10,000 trade size. So it made $9,000 on a $10,000 per trade. Non-compounded, just $10,000 per trade. If you compounded it, it'd be even more. 90% return. All right. Only issue I see here is like it, you know, let's give it 2 years and see, like, I don't know if it would have made my list. 2 year, it's still loading. Let's get the full loadage. 2 years. I want to be as practical as I can with you and not claim that I would have done that. I would not have been in this. That's all there is to it. Maybe I would start now. So let me show you my thought process. It's not super systematic, but it's my process. I would not be in this. I will not trade this. It's just, it hasn't changed enough. This is a recovery rally back into an old range. I would only look at this above 80, you know, new all-time high. And I know for some of you to be like, what are you joking? That'd be too high. All right, go look at the charts. Go look at all these things that go from 20 to 80 and then from 80 to 800. This is not going to 800 unless it passes 80. If it passes 80, I don't even want to say the sky's the limit. The outer space is the limit. There is no limit. Okay. Inflation, liquidity, one of the few remaining successful retailers. I don't know. There's some storyline there. Maybe they innovate. Maybe they partner with Amazon. Maybe Amazon buys them. I don't know what the story is. Above 80, there's a story. There's a change. It will have made a lot in a short period of time. And I would consider trading it. If I'm dead wrong, I won't lose very much. All right, great example there. So you see where that's where the simplicity is not ultra simple, okay? The execution is rigid and simple. All right, the metaphor we use sometimes is hammers and blueprints. A hammer is an extremely simple tool. A nail is an extremely simple object. Wood is understandable and simple and basic. But you don't build beautiful houses and cabins and everything else and boats and everything else out of it just because the tool is simple. All right, if I give a hammer and nails to my 4-year-old son, we're going to have a mess because he doesn't know what to do with the hammer and nails. He thinks he knows, but he doesn't really know. So we're not going to have anything. Then you have, beyond that, there's other things you need to know. But here's the thing. You don't have to have a hammer, nails, and a tree and then figure everything out from there. You don't have to make your own plans. You don't have to cut down the tree and shape it and get it. It's not that distant, but there's some more you have to have. What do you need to have? You need at least some kind of a plan of what to do with the simple tools. You ever build a bookshelf and put the, get out of order a little bit? I know I have, especially like drawers, drawers, bookshelf, entertainment center, whatever. You build these things, you're putting it together, and then you realize at one point you put this one board on backwards, right? Or upside down. Or you skip this one step, or you didn't put this one pin in this one hole 5 steps ago, and you got to go back and undo it. You've lost your progress. Okay. That's what has to be added to the simplicity of, hey, it's just simple tools, build a nice thing, right? So I would not trade Kohl's because it's not showing me enough evidence it's really ready to go from 50 to 200. That's where I'm going to make the most money. That's where it's worth tying up capital. The only upside I really see here is 50 to 80, and I'm not going to get much out of that. Okay, so we have a short-term back test that shows me profits that I won't use because it's not showing me that it has the capability. These other names show me the capability of multiplying themselves. If I'm wrong, it doesn't lose very much. If I'm right, I get multiples. Got it? All right. Futu we've looked at. Fiverr is a fun stock. Wow, I had no clue it looked like that. 60-minute. So, okay. Can we say on the very next stock, we have exactly what I'm talking about? Hilariously so, 50 to 300. Okay. 50 to 300. How many think this is too high? 50 is too high. If all you ever saw was this and it's now doubled, that's too high. 300's coming. Okay. This is a weekly chart. Let's keep that in mind. There's 100 opportunities on the hourly chart here, maybe hundreds of opportunities. It showed its hand. You can trade it from there. You missed it. You started here. Go ahead. You missed it. You want to start here. Go ahead. You missed it. You want to start here. Go ahead. You missed it. You want to start here. Go ahead. If it goes down, you'll most likely be flat. If it crashes down, you had a small size anyways. If every single high beta stock gaps down 50%, you didn't use your whole net worth. Okay. You should be able to recoup from that, continue on, because they can make 100% a year. Size it correctly. All right. Let's go back to the hourly and let's see how this is looking. It's fantastic. We talked about it for the very first time in our community, even before that, around here. And then this is what it did afterwards. It had a trade from 220 to 300. Now, here's the thing. This is a longer list than I trade. This is not my list. So I'm not in that. Sad about it. Would have been nice. I think I'm not. I don't know. I think my actual list is... 15, 16, 17, 18, 19, 20. This is not my whole list. I don't think I'm in it. I don't think that's one I'm running, but I kind of wish I had, and I might do it. Where did I leave off? Wait, is this one my list? 210. Oh, this might be my list. 1. I need 40 symbols. If it's 49 or so symbols, that's my list. 1, 2. Yeah, that's my list. Znog. That's one of the bad ones. I don't know why I keep it. 1, 2, 3, 4, 5, 6, 7. Okay, this is my actual list. All right, as of a week ago. And Fiverr's not on there, but there's plenty of good ones. All right, so this is my actual list as of 9 days ago. And not much has changed. I think I added one thing since then. I don't have all these on. Literally, I don't have all of these on out of laziness. I should have them all on. I'm just lazy. I got enough that maxes out the account at this point already, where when the market's rising and I get into a lot of things, it can't take any more trades because I have more than enough opportunities. It won't get into all of them. GRWG. Identified it here. Profitable since. Nice swing trade there. A little whipsaw there, but it's doing good. Home. At Home Group. I think that's a retirement kind of thing is my guess. Big time. Like that's one of the franchise businesses I've looked into a lot. I live in Florida and it seems like a big growth industry, and there's only a larger population still of people who I mean, I got to double check because it's been a while since I've even thought about it. But I think baby boomers aren't needing assisted living yet, at least very few, if there are any. I don't remember the exact years or how old they are or anything, but they're in retirement, but they're not quite into elderly care. I don't even think the earliest of them is. I could be wrong. What is it? Like after the Great Depression? Not the Great Depression, after World War II. So we're probably there, right? Is it the 50s? I just can't remember when it started. So 70. All right, we might be at the very beginning of that whole generation entering any level of that, but it's already been growing since then. So there's definitely a huge storyline there, even to the point where I've considered buying a franchise that does that. 1945 and up. Thank you, Charlie. So that's 55 plus 20, 75. So that's the very beginning. The youngest baby boomers, I'm sorry, the oldest baby boomers are 75. The first baby boomers are 75. So I don't know the average age where assisted living kicks in, but there's your idea for the day. One of many, I guess. 1 year. Okay. Talked about it here. Slightly profitable since, definitely within its normal pattern. This is a 1 year equity curve that's over 300% return on capital. Only takes one of these for how much is that one? 4%. Okay, so how many Kohl's trade? Not Kohl's. What was the other one? AT&T. Okay, 300 divided by 4. You could have 75 AT&T trades ideas and select 75 of those and one home and break even. You need 1 out of 75 as long as it's one of these. If it's one of these other ones, you need 1 out of 30. And so far, I think you've seen the evidence that out of sample, these are things that are continuing to work. And when they don't, you don't lose very much. So many of these do follow through. Many of them won't, but I have a plan. Jemiah, that's pretty. Oh, 2 in a row at over 300%. Yes, a lot of that's hindsight, but here is where we found it, and it's made more in the last month than SPY would have made you altogether. Okay, it's continuing to work. Lovely. Kirk, here's your symbol. Did you know you had a symbol, Kirk? Is he still here? Nobody logged out, so I guess he's here. It's alphabetical, and I still can't find him. There it is. Kirk, you have a symbol. Kirkland's. I would not have guessed Kirkland's. Is that the store, right? Kirkland's? Like, I always get them, there's like a Kirkland's brand and there's a Kirkland's furniture store. Either way, I would not have guessed. And he trades it. That's right. And you have traded it. Yes. This is where we identified it. It's been profitable since. It has had a few whipsaws. It has had a nice pullback. It just got in. No recommendations, but did you see that? Looks good to me. How much was that? I forgot the percent return. I want to look at that. Because we just saw two 300%ers in a row. Oh, another one. 300% returns in a row. Okay, doesn't mean it's going to keep doing it. But maybe you're only half right. Maybe it only makes 150. Wouldn't that be sad? Like I said, I told you last week in my PowerPoint, annualizing 50%, that's currently more like 70% with comfortable volatility. Very comfortable on net worth basis, comfortable volatility in the account. All right, 160%, 2 years. Most recently, it's not been thrilling, but it looks pretty good. Lithium. Wow, is that a big LAC? I think that's one I own. Yeah, LAC. I just bought a little bit of that, a couple $100, just out of the lithium story. That's one I just buy and sit on. So it's a lunch money trade. LL. The sun's coming, so I can't. Lumber liquidators. I'm surprised. Yeah. Okay. That's why I don't guess at these, because I would not have guessed. That would be one. All right. Super strong here, kind of tapering off. You know, since you don't want to trade every single opportunity, I could see leaving this one off. Let's look at the weekly. I would leave this off. I would not do this one. Above 42, you could set an alert somewhere that you don't have to leave running. Like Thinkorswim will run alerts and send them to you without your platform open or the stock chart open or anything. Set alert for 42. Above 42, now you got well over 100%, almost 200% upside. But not yet. I don't like it yet. Love. Any other requests? Because I'll probably wrap it up here in a minute on the stock charts and then just talk to you about moving forward. If there's a request, you can have maybe next week. We'll start at Z and move forward, move backwards from there is what we can do. It's funny. Is Bitcoin even GBTC? We just didn't get to the G's. Why is it not on there? A, B, C, D, F, G. It should be on there. I'm surprised. It's on every way I look at this list. It gets on there. But that's the big winner of the week. It's one where I have a larger size. I've reinvested for a long time in the sizing, and you know, 80% or so in a week. I'll take it. Tesla. I don't know why. Yeah, this list is not as long as it should be. There should be more names on here. Right there, it is on there. So Tesla. This is really nice. You're out of this. There's another Kirk I know. You know, a lot of people bought in here, and this is precarious, but I don't have to worry about it. I'm not in it. It's flat. I checked today. I was looking through my positions on the automated machine, and I remember it had been going down. I was wondering if it got back in, and it was still flat. So, well, I guess the chart's going down. There it is. UB flat since 853, and it's down at 780. I'll take that. The equity curve's thrilling. Very nice equity. 1 year. 1 year. Let's go to 2 years. Let's show you the smoothness that happens when you zoom out of the silly mirror, you know? It's a little smoother. 1 year, little bumpier. All right, 190% 1 year trading it. And it's funny, like it's not just Tesla. You don't have to like have anxiety over whether or not Tesla is going to work moving forward. You see all these other names. I don't even know what they do. Don't know anything about them. They're not Tesla, that nobody's talking about. Plenty of opportunity, abundance of opportunity. All right. So with that, this is something you now own. You have the intellectual property of these symbols, a general process of only looking for things that are expanding and growing and moving fast. All right. New all-time highs, at least have broken out of a range that give it a tremendous amount of upside to its all-time high. If not, it's making an all-time high or has made an all-time high in last year. You may not be able to do the back tests. That's where I encourage you to learn with me. You can come in our membership. It's $280 a month, or you can get soup to nuts, top to bottom, lists, strategies, automation, personal training, and group mentoring for $5,800. Okay. I think it's a life-changing opportunity. In the last year of doing this, you could make that money back. Would have. I don't want to say no promises. Okay. You could have made that back on a $7,000 account. So between losing less, becoming truly diversified, taking the big idea at the very beginning of this, which is low probability strategies that make consistent income, consistently profitable with low win rate, using good names, not because we're in a bull market, it's because it navigates things that rise and fall at the right time. Okay. You want to learn all about that, plus hedging, VXX trades, long volatility, long bear market strategies, all that kind of stuff. I'd love to work with you. All right. So you know how to get a hold of me. You just hit reply to any email you got. Be happy to talk to you, or you can go to learnautomatedtrading.com and sign up for the program. Would love the opportunity to work with you. All right. So we'll wrap it up there. Many of you came last week. We went on for 2 hours. I don't want to do that to you again because you may never come again. So we'll wrap it up. And next week, I think because we're having so much fun, we'll keep doing that. And we'll start at the Z's and work backwards. We'll look at how this ultra simple hammer and nails strategy worked next week. Okay. We'll look and see if it blew up anywhere. See how it continues to work. And I do think for many of you, it may take multiple times of reviewing this before you start to convince yourself it might be worth the effort. But you can start to look at it on your own. Hope this helps you a lot. Love to teach you even more if you're interested. All right. There was Q&As. Block. Sorry. I don't want to ignore. Okay. Block looks thrilling and really good. There's your block ETF equity curve is tremendous. Wow, that's cool. Somebody asked for that in the Q&A box. I'm sorry, I only look at the chat most of the time. Ackley, how are you? I haven't seen you in a long time. I'm back studying with you. Yes, took 64. Yep. We met in New York. What are you teaching? Hey, send me an email. Reply to me. I saw your business Zoom. I didn't know that was you. Great to see you again. Let me see if you're still on. If I'm just talking to nobody. Nope, you're still here. Ackley, wonderful. Remember you very well. We had a great time in New York. Send me an email. Let's schedule a time. Let's talk. I use TradeStation to send the orders to TradeStation, who is the broker. So yes, it's fully automated, all in one. So R and R asked that. Yes, thank you. All right, I think I covered everything now. All right, thank you all. And any questions, hit reply to any email you've received from me. Be happy to schedule a call or answer your question via email. And look forward to working with you and helping you as best I can. We should have some more fun next week. Look forward to sharing plenty more stuff that you can use to turn your trading around and get more profitable, get more diversified next week as well. All right, thank you, and talk to you again soon. See ya.